All right, folks, breaking development here. Treasury Secretary Scott Bessent just posting right now on X saying, following a very constructive phone discussion with the government of Japan, President Trump has tasked me and the U.S. Trade Representative Jamieson Greer to open negotiations to implement the president's vision for the new golden age of global trade with Japan's prime minister and his cabinet. Of course, Wall Street has been bracing for slower growth, lower earnings, and a whole lot of other things, including maybe a recession. In fact, Goldman, I'm going to show you a chart here. This is probably one of the big news items, right? They're pointing to tighter fiscal financial conditions. That's moving in the wrong direction. And of course, real GDP, we saw last week a whole lot of folks saying, hey, GDP is going to be less, maybe under 1%, barely above not recession. Although, they also raised their recession to 12-month probability to 45% from 35%. So they're not the only ones, by the way. You can see also because of the GDP going down, they see a greater chance of recession. But not to be outdone, J.P. Morgan really grabbed all the headlines over the weekend because they now see a 60% chance of recession. You can see recession and some of the reasons for that, 60% recession. They think there's some resilience left, but not a whole lot, of course. And of course, over the weekend, Secretary Bessent is saying there won't be a recession. So let's figure this out. I want to bring in now former National Economic Council, the chief economist, and of course now current SMBC chief economist Joe LaVorgna. Joe, I want to take a look at this table here from J.P. Morgan. I think it's really something that we can learn from. So here they're saying 40% probability that we won't have a recession based on animal spirits, at a 5%. That was a lot more. U.S. exceptionalism ends. This is one thing that keeps bothering me, right? Like the end of American exceptionalism and Goldilocks. So they're saying those things are hanging by a thread, which of course coming into the year, they were like a tidal wave. And then what do you make of it?
It's a lot of hyperbole. The administration's trying to do something to reset the economy from an unsustainable path, and people could debate about how they're going about doing it. But certainly the debt we've gotten in the past 4 years is astronomical, and the U.S. is on a bad course. So drastic actions need to be taken, which the administration is starting to take, and more actions will likely be necessary, especially as it relates to spending cuts. So on the exceptionalism, Charles, I would say that's not 25, it's 50-something plus. Right. But then again, I look at the glass as half full. I'm not a nervous Nelly or a pessimist, generally speaking.
Listen, I'm with you. I think this is, Wall Street comes up with these sort of themes. Everyone jumps on the bandwagon. And it's ironic because it seems contradictory on the recession call. Exceptionalism unwinds and misery loves company. So the rest of the world's going to have modest growth, but the rest of the world's also going to have a recession. I don't know. You can have it both ways. Yeah. Let's talk about today's action. Go ahead.
The thing I want to say again is I do think, given the president's negotiating skills, despite what some of the rhetoric is, I expect there eventually to be a deal. And there, because a negotiated settlement that's in the U.S. best interest, but also calms markets. And the problem with a lot of these recession estimates is they seem to be static, maybe, and not reflect the fact that in a few weeks or days, whenever, you can have a breakthrough and things can rapidly change, and that tightening of financial conditions all of a sudden becomes a stimulative tsunami.
All right, the market spiked earlier today on a call that an interpretation that Hassett had made a call. It was on a rival network, if you will, to sort of put a pause on the 90-day, for 90 days. Ackman's called for it. I think Druckenmiller's called for it. I personally think it would be a colossal mistake. I think it would be the ultimate form of weakness at this point for President Trump to put a pause on this. When you have 50 nations coming to the table, breaking news on Japan, Netanyahu at the White House, it feels like they've got some momentum.
Well, again, I don't know. I didn't see the story. I know Kevin. I don't know if he said it or not. But
he didn't say it.
He didn't.
It was fake news.
Oh, well, okay. That sort of explains it. But look, there's going to be different ways people are going to say the process should unfold. But I think ultimately, as I was saying earlier, there will be a deal, and therefore, yes, to capitulate right now would not be prudent, and nor do I expect that to happen.
I want to talk about the Fed, right? Their role here. Again, last week, it was a little frustrating. Now, I understand that Jay Powell maybe is backwards against the wall, but just a week before they had the FOMC meeting, he resurrected the term transitory. He must really believe that inflation is transitory to use that word ever again, even in private. I don't think he says it at home, right? But he felt comfortable enough. But then, of course, we had the reciprocal tariff. That table threw everyone off. The methodology threw a lot of folks off. So he acknowledged, okay, inflation may linger a little bit longer, but shouldn't they? This is truflation. Over the weekend, they got down to 1.22% inflation. They're down at 1.4%. I mean, it seems to be a huge mistake if the Fed really thinks this is more important than a slowing economy.
I don't know if I trust this, Charles. I don't know exactly what goes into it, and I've looked at it a little bit.
Where do you think, though, that in terms of inflation or slow economy, what's the greatest threat right now to the economy?
Inflation. And again, we're going through a budget process that the Fed might treat as being inflationary, which it's not. But to the extent that you have concerns about tariffs and the Fed debating easing, the market pushing the Fed to ease, I'm not sure they're going to ease. I don't think there's recession either. The Fed, in my opinion, should keep rates stable, see how things play out. And then if oil prices do move low over the course of the year because there's increased supply, which I expect, the tax cuts are made permanent. The regulatory framework is pretty inflation friendly. The Fed could then cut aggressively, but maybe not until next year. The problem with the truflation, Charles, is that the people I think who are highlighting it being weak now weren't talking about it a year or so ago when that 3% didn't seem like that was the right number either.
President Trump posted a story about oil. He just mentioned oil and interest rates. And so he said oil is down, interest rates are down. He thinks the Fed is moving too slow, that they should be cutting. Let's just talk, though. There are sort of benefits. Not everyone in America is in the stock market. If they were, we'd have President Harris in office right now. Gasoline prices matter more. Food prices matter more than the stock market did in November because more Americans care about that day to day. When they wake up, that's what hits them in the face. No one's kind of talking about some of these other things that are happening. Mortgages are coming down. There are some things happening right now that don't make financial news, but in Main Street are pretty good news.
Well, the kitchen table issues of Trump's base cares about, can they afford a mortgage? And you're talking a lot of flyover states where you drive a lot. So food prices, gas prices, these are real big issues. What we don't want to see is an extended bear market in equities where there's a negative wealth effect that leads higher-end consumers to pull back, which in turn sets in motion less production and capex.
So should the average person out there suffer? Should the average person in America keep credit card bills high so that the stock market stays high so that rich people stay rich?
Well, this is the issue, Charles. This is why we entered this new administration with arguably a very unsustainable backdrop.
So if the stock market takes a hit, should the majority of Americans care? The market always comes back. Why do we put the market before the Americans?
Well, we shouldn't, and I think that's sort of what the administration is thinking. But again, it comes back to whether there's a downturn. I believe we could avoid a downturn. My probability of a downturn is not as high as some of the other shops you showed. And if that's the case, then everybody benefits. But I understand your point. It's well taken. And these are the issues that the president ran on and won on. So this is why I don't think, we were saying earlier, he's going to immediately back away from his approach.
Right. What timeline are you concerned about then? We got 30 seconds. Like, how long should it take? To your point, soft data can become hard data. How much time do we have before something like that happens?
100 days is April 30th. It goes a bit past then in terms of the budget. Maybe by Memorial Day, we'll get some clarity on things. And by the way, if we could agree on what the budget contours look like and see what the spending cuts are, then that may pivot back to tariffs. And perhaps tariffs may not have to be so high if we get more on the spending side. So everything to me is still negotiating. And, nothing is settled yet.
Right. Great stuff, Joe.
Thank you, Charles.
Always love having you here, man. Thank you very much.